And then Nick sneaks in on here on us. We're having a little dividend discussion here. Nick, how you doing on this Tuesday morning?
I love dividends.
You love
I'm
dividends?
doing.
Do you play
Really?
AT&T and Verizon ever?
No.
They're too slow for you. You love dividends, but they're too slow for you.
Yeah, Nick,
Well,
we've never heard you talk about dividends before.
I make my own dividend. If I had
Yeah, that's
stock,
true. He does
if
it
I had
through
stock,
options.
yeah, you can make your own dividend if you own stock and you can sell covered calls against them. Perfect.
Discuss that strategy. So you're saying like buy AT&T, sell some covered calls against it, and it
No,
enhances the yield, or
I
no?
don't buy it in order to sell it. Some people love Apple, for example, love AT&T, and they invest in it. And what's wrong with adding some income to by using your asset? Put your asset to work.
Right.
You can straight up sell covered calls against the stock that you own, so you're not creating margin risk. And the worst case scenario is you might be called away from your stock at a higher price, so you can participate in more upside, keep the premium you collected by selling the risk. If it expires, if it goes up through the price before it expires, and you get to sell your stock at a higher price. And you can always turn around and rebuy it, but you can put your asset to work that way. This also can be used if you're nervous about a period of time and you want to buy puts. You can do the calls to finance the puts.
If you go out to the monthlies and look at the chart of Walmart, I played this Walmart for 3 or 4 years, exactly what you're saying. The dividend down there used to be around 3%, I believe, around $50. And I kept writing, I'd buy it at 50, and I'd write the 52 and a half, or I'd write the 55, and then I'd write it 6 months out. And then if I got called away, I put my bid back and rebuy it at 50. And I did it 4 or 5 times where I get called away on the stock, or the call just expires, and you're just basically enhancing the whole dividend. So I was getting paid a couple of ways. I was getting the dividend, the actual dividend that the company pays because I own the shares, but I'm also taking all those call premiums. But eventually what happened, the stock started rallying, and I didn't get it back, and now it's at $82. So I don't know, if I add up all my dividends and all my premiums, maybe I got 30 points worth, but I don't know. If I would have been better just to buy the stock and hold it.
Yeah, but the other question is, would you have stayed in the stock if you didn't have the dividend?
No,
You
I
know
would
what
have
I mean?
sold it anyways.
Right, right. So the dividend didn't make you. The sold calls actually give you a little more conviction in your long thesis in the stock you're in. You did it actually as a strategy, but if somebody is fundamentally buying Walmart and they're afraid about it, and if you sell your own calls and to generate your own dividends, then you have that much more on the break even on the downside. So if it drops 50 cents, you're not that sweating. You're not that worried because you had 50 cents or whatever collected from, synthetic dividend, if you want to call them that.
We saved this one for you here, Nick. Priceline actually getting an upgrade here today from Stifel Nicholas. They're upgrading the stock, and the stock is trading up 12 points here. And we know you're our Priceline specialist here, Nick. What are your thoughts on this, first of all, on the Stifel upgrade and the pricing action in Priceline?
12 points is not a lot in Priceline. That's first off. And somebody yesterday asked me, is it time to short it? I said, I have no reason to short Priceline for Priceline specific issues. Only reason I want to short Priceline if I'm, for example, shorting the markets, it will run faster than the markets downwards as it will run faster up. So I saw the upgrade today. I hope they pop it up 30, 50 points so I can short it via some way out in time calls. But I don't have a specific reason to short it. It filled the gap. I said before, I think on your show as well, that 1130 could be the target node or on the downside. So now they filled that gap on earnings. And I think almost to the penny, maybe 80 cents away.
Yep, exactly.
But,
80 cents away. Wow, what a textbook play there, right? Coming down to fill the gap. Holy mackerel.
Yeah, and then that whole area between 1180 and 1130, 1120 seems like a battle zone. Anything above it starts to get shortalicious, so to speak. People start to get into it in the short side. But I want to see it break 1160 emphatically. Because if you look for the last, I don't know, since March, I think, there has been lower highs. You can draw a line to connect all the lower highs. And if it breaks it, then it might invite more buyers. So 1170 could get it to 1200. But the market has to cooperate. And if yesterday was a dead cat bounce, so to speak, then it's going to find some resistance, upgrade or not.
Let's Go ahead, Dennis. Go ahead.
I was going to say Garrett in the chat is giving a little bit of color. Garrett, are you kicking around there? You can actually just give us some color on this actual upgrade there on Stiefel?
Yes, sir. Yes, I am here. I'm actually taking a look at the note right now. Let me just swing over back into Priceline because I was hoping I could just leave that there for you guys, but I've got it for you. So Stiefel seems to be pretty beneficial or pretty bullish on the stock, given what the developments are in Europe right now. As some of the problems seem to subside a little bit. As I put into the chat that you guys saw, Stiefel's estimating over 70% of 2015 bookings are exposed to European currencies, and as everybody knows, there's been a whole bunch of FX headwinds issues over there. But it seems like Stiefel seems to think that the U.S. travel to Europe is going to help kind of offset any problems that may come out of people in Europe that are doing travels just because of the FX situation. So they're kind of they're getting bullish on a derivative move. FX problems over in Europe, and then this.
With all due respect to everybody in the whole industry and all those people watching markets and giving all specific, the idea is they do good business. If the global environment is good, they're going to do just fine. That's the easy way of saying it, because with the currency fluctuations, we've now been proven that nobody knows what the heck's going on, and nobody knows how the heck is going to impact everybody else around the world. With bonds moving, with all these central banks intervening this way and that way, we really don't know. You just got to trade the fundamentals and make room for other stuff. So yes, there's nothing specifically wrong with Priceline, and if Europe is recovering, logic dictates it's going to recover. However, they're all going to be cautious this earnings season. Everybody's going to come out and throw everything bad under the headline of, we had some currency issues we had to deal with. Meanwhile, every company has, what do you call those, fudge lines, or in the P&L they have junk they hide. And then whenever they have an excuse, they throw the junk out and say, oh, this was, currency issues. They're not cheating. They're just kind of like you hide your report card from your parents because you're going to wait for the next one to be better and show them both at the same time. So it's fine. If the markets cooperate, it will rally on this upgrade. And technically, I just want to see it get to 1170 before I get excited to chase it. And sometimes I miss the move upwards, then I catch it at the top.
Yeah, I mean, chasing these things off upgrades and downgrades is not, not my cup of tea. I don't think Dennis is either. It's something to pay attention to with the ratings because they do have an effect. But, Goldman Sachs, Morgan Stanley, those guys carry a little bit more weight. Nick, I want to talk about GoPro here, and you're actually going to be proud of me here. I actually limited some risks that I had. I bought went way out, July 45 calls. I kind of got them on the cheap. And it had 3 upgrades over the last week, and it just can't take out 44, and it's starting to make me a little bit nervous. So when it got up there yesterday, near 44, I was able to sell the 46 calls cheaper than I bought the 45s. So I can't, there's no way I can lose on this trade if they both expire worthless here. But that was just kind of a little strategy. I kind of like being on the sell side of options as well as being long. Got a little bit of a hedge, but my plan is to try and cover those as it breaks above 44. What's going on at that $44 level? You see all the highs there?
I see. And, we've talked about GoPro, and it was my short for the year, it and Tesla, and they sure paid. I think in October or November, somebody asked me to write up, what do you want to short in this coming year? And I said I have 2 shorts, GoPro and Tesla. The GoPro was making lower lows and lower highs, and it got pinpointed not too long ago. I think the date was 3/12, 3/13. And 3/14, those 3 days, it meandered up towards the lower high line that it had. Mainly the range tightened up to a pinpoint. So it had to either come down to 30 or break out of it. And it did, but it didn't break out of it. It just inched out of it, like you said, and now it's stalling at 44-ish. So 44, 45 is definitely a level where it needs probably a fundamental reason to go up from here. I told you that the GoPro is just the story the way it is. It's just a camera, but people had priced in some crazy ideas of channels and YouTube killer and this and that. It is possible, I guess, but you need to show me this, and it's not going there yet. Plus, there's a lot of competition out there. I know now in the news they're talk about Xiaomi or whatever. I don't know if that's it or not, but some Chinese maker that actually has a legitimate camera that could compete with it. I think there are better cameras out there. I have two GoPros, and for some reason, one of them want to reformat my card. So I'm not sure that they're the best cameras, but I don't have to worry about it leaking water when I take it underwater. So that's the only plus I have with my GoPro. So technically, I think 44-45 needs a reason to bust out of there. I'm glad that you spread your risk, and this way now you're kind of like sitting long with no cost, right? Kind of like a free lottery ticket.
Yeah, yeah, you taught me well. The oil's been moving around a lot here, and we got a question coming out of the chat. Do you do anything in the CVX weeklies?
I don't, and I thought the reaction yesterday in oil company was strange. I have a small short in Valero, and it was really green on Friday and not so green yesterday. It's a small play just to participate, and I don't get it. The oil falls out of bed yesterday, and what a sham that market is. And let's use rigged here in the pun intended. I really don't know what's going on with the oil play, so I don't want to worry about it. I like to do credit spreads and headlines don't mix. Like Elon's headline would have blown out any credit spread. Yes, just as you guys mentioned that he tweeted, and I fear the same thing in CVX and any other oil play, because you can't fundamentally trade headlines because they're headlines. They're like an accident. They're not planned events or foreseeable events. They just come out of nowhere, and that's why I don't do it. As far as oil, I think yesterday, spiked with minutes to go in its day, and on what, I don't think there was any reason for it. Technically, yesterday, I think it skirted a couple of technical situations where it could have brought it down into the 30s. It's still possible. So I think the Iran deal might be the catalyst for the erasing that scenario, because if they strike a deal in Iran, oil should whoosh down, because there's so much oil that could potentially come to market from Iran if they come to a deal. And I think the deadline is today or tomorrow. It's definitely this week. So if you're playing oil, you might want to get up to speed on that part.
Nick, just moving on here. Piper Jaffray raising their estimates and their price target for J.C. Penney here this morning. They're raising their price target up to $14. That's a pretty beefy price target on the $7.83 stock. And JCP is trading up 20 cents here in the pre-market on this. Caught a little bit of a bid yesterday. Seems like every time this thing gets over $8, it can't hold on. First of all, do you play J.C. Penney at all? It's probably too small a price for you because you like a little bit more of the movers, but the stock can move sometimes. What are your thoughts on JCPenney?
I don't play JCPenney, but technically it has had higher lows consistently from a few months ago since that sharp drop. And I'm going to look at like mid-December, I think. So higher lows are good, especially if you're knocking on a roof. Except the roof busted up to like $9, so a spike on just before the earnings, and then disappointed everybody. I mean, just looking at this at the chart, it's a heartbreaker for whoever buys it, because it shows promise, and then falls off a cliff. But technically speaking, the range is tightening, and you can probably, it looks like fish mouth almost. If you take it from the real highs of 1125 a few months back. So the upside target of that range is 875, and the low side is it needs to hold, let's see, eyeballing 8, maybe 775 or something like that. So, no, I'm sorry, not 8, 760-ish, 755. So if that range, if it's trading the range, it has potential upside, and if it's got an upgrade now, maybe it wants to reach for that. I think it should show some resistance around 825. So if it clears that, that's good news already right there, because that's the point of failure several times recently, except for that one poke up just before the earnings. So I think that it has room to the upside a little bit, but if it breaks that 750 area, 755, 760, then it has a danger of revisiting lows.
Let's just talk about a few of the momos here, social media stocks. Twitter, now it had to break out over 50, double top up there, 5180, 5190. Got a downgrade here. I don't know. I mean, it's like it's a breakout, but it doesn't seem to be following through. What do you think about Twitter?
I'm shorted via puts, small dollars for decent payout if it works out. Yesterday I thought the stupidest thing. First of all, technically it has resistance starting 50 in the options world, and it has some support at 48ish. But yesterday when Elon tweeted and Tesla ran, so did Twitter. So you tell me how that's good news for Twitter that Elon is tweeting. I think it's people who they're just riding the momentum. However, after all said and done, they will realize that there is real resistance around the 50 area if you look at the chart. So that's why I put my money on puts. And if it breaks, there is a rising wedge, and the upside trend of it is like 53.5, and the downside is like around 49. So if it loses 49, I think it can lose a few more from there, invite more sellers, I should say. So technically, I like the puts here, especially that if markets do retrace a little bit, and I think they want to a little bit, not just no doom, just retrace a little bit, because we don't, without any positive catalyst, where is the buying going to come from and why? I like to take some puts into it for the next couple of weeks and see. They're cheap, and it has a decent payout. And as far as markets are concerned, I think on Friday, I don't know why, maybe I heard wrong, maybe I'm the only one that read, I think Yellen said three things that are new, two very bearish, one very bullish, and nobody's talking about them. If you have a couple minutes, I
Sure,
think
go
we should
ahead.
talk.
Yeah, we'd like to hear that.
Yeah, first of all, I think she emphatically, for the first time, said that it's not going to be 2016 for the interest hike, for the rate hike. It's going to be 2015. And then the second statement goes along with the first. I think that's pretty bearish, because there are a lot of people hoping or convinced it will be 2016. And what are those people going to do? And how their fundamentals are going to change. And secondly, she said that they might need to act before the 2% target, because she probably is saying, okay, I'm going to need to raise rates this year, but I'm going to have to justify it because CPI is likely not going to be at 2%. So I have to say that, and to say, well, I told you back in March that, that was a possibility. The third thing, Chad, she reserves the right to slow it down, pause it, and then even reverse it. Reverse it. That's QE. So what do you mean reverse a rate cut? Rate hike. That's either a cut or add money into the system. Am I wrong with this? I don't know. That's what I read and heard, but nobody seems to be talking about those. All these three things are fundamentally impact the bear case, impact the bull case, and the third one impacts the bear case. If indeed she's going to reverse her rate cut, I will have to give more room when I'm shorting.
We've been on the line with Nic Chahine. He's a Marketfy Maven, author of Create Income with Option Spreads. He joins us every Tuesday with a very intelligent outlook at the options market. Nic, thanks for joining us. We'll talk to you again next week.
Thanks, guys. Looking forward to it.
Thanks, Nick.